global iron ore supply and demand has a direct impact on the performance of Kumba Iron Ore, Assore, African Rainbow Minerals. Indirectly, it also affects the performance of BHP, Billiton and Anglo American. AN's Chief Investment Officer, Asif Mohammed, joins us from our studios in Cape Town. Asif, thanks for your time. And when you look at the global picture, certainly the picture that we've been seeing painted, as I was saying to our previous guest here on the show, globally, is that we headed for slow growth. But still, people are talking about growth. People are not talking about a contraction. Is that your view as well?
Yes, we are heading for slower growth. The US is already going to slow down. Europe has already slowed down. China is slowing down. But you must remember, China will probably slow down to maybe 5% GDP growth. That's still very good. Don't forget about India. However, longer term, if you look at the China has been a big exporter to a number of developed countries. But going forward, China will be changing from an export-driven economy to a consumer consumption-led economy. And what it's doing, and it will probably play out over the next couple of years, it's really converting, that lower income Chinese consumer to a large middle class Chinese consumer. So by 2045, the Chinese middle income consumer is going to be a lot bigger and larger than the US middle class income consumer. And that's going to be positive for commodity prices in the longer term. Whether it be iron ore, whether it be steel, whether it be coal, or whatever it might be, but it's generally going to be positive for those commodity prices. However, in the meantime, don't be surprised, if commodity prices fall. Yeah. You mentioned iron ore, and iron ore is possibly a unique case in point where there's a lot of supply coming on stream over the next couple of years, maybe next 2 or 3 years or 4 years. And just most recently in Namibia, they've found iron ore found in the northern part of Namibia, and they were saying that it's probably 100 years worth of supply. The big cost is really to try and get the iron ore to the ports, and you have to build them from nothing. You have to build the railway, you have to build the ports, you have to do all of that. But nevertheless, there's a lot of supply coming on stream. There's a lot of excess supply underground. I think in the next couple of years, iron ore prices should be, should fall or stay at current levels, and that's the reason why there's this excess supply coming, and that's why it's not good for a company like Kumba or Assore or even African Minerals, Rainbow Minerals.
But I suppose that's why also you have sold your Kumba Iron Ore as well as Assore shares. But at the same time, you're still talking about good demand coming out of China. And I did hear one number that startled me in your opening statement, where you spoke about 5% growth in China. I remember people saying even if China was growing at 7%, that's okay. But now views seem to have changed drastically there.
Yeah, and it's a lowish number. I do agree with you, but still, even at that growth rate, that's still very good growth going forward. The Chinese consumer is one that we need to watch out for longer term. So all I'm just saying is that the Kumba share price and the Assore share price is currently pricing iron ore prices of about $130 per ton, and as you know, that the Chinese iron ore price is currently $90 a ton, just under $90. So it's in a sense priced for perfection. So what I'm saying is, I'd rather than be in BHP Billiton and Anglo American, where the prices, where there are pricing in higher iron ore prices, but it's more diversified. It's got exposure to coal, it's got exposure to iron, aluminium, it's got exposure to other commodities. Although there are problems there also in the case of Anglo American. I can think of the big delays in their South American projects like Minas Gerais, and possibly I'm not too happy with management in Anglo American specifically. But nevertheless, I think it's priced in quite a lot of bad news. So longer term, I would probably buy it at current levels, and as it falls further, look at adding more to our holdings in BHP Billiton and possibly Anglo American PLC.
Hi, Asif, it's Viv Govender here. The question I want to ask you is about your assumption about increasing, the increasing wealth of the Chinese consumer, obviously creating more commodity demand going forward. If you look at, for instance, right now, China demands a larger percentage of the world's iron ore production than it does of the world's GDP. If we see the Chinese economy move to something like what the American or the European economies look like, even if the economy grows significantly, one would expect the intensity of demand for things like iron ore would actually decrease, because consumers don't demand as much iron ore, for instance, as building bridges or building railways, which is what the current model is right now in China. Do you not foresee that there'll be a reduction in just the amount of iron ore demanded, even if the economy does grow at 5 or 6% going forward?
I do agree with you in terms of the intensity, that it will be lower. However, on a net basis, if you look at the potential where the Chinese consumer, just to get to the American middle class, number of consumers in the American middle class, that's a significant amount, a lot more, and that will support growth. It's not going to be overnight. In fact, it will probably fall, and the demand will probably fall in the next couple of years. But thereafter, I expect it to increase, and it will slowly get to, if you might call it, more normalized levels of consumption. As you correctly point out, currently it's taking an excessive amount of its share, of the global share of iron ore and steel, because it's building from a very low base. However, I believe in the longer term, and not just China, but also India will support the demand for commodities.
Yeah, as if we're running out of time, we've got a minute essentially. I wanted to allow you to talk about your book, and we're putting on the service that you're talking about your book, but I thought it's also important to give you an opportunity to talk about a share you believe is showing value, Metrofile. You say it's an unloved share, and we do know that the company has got a very rich history, and in fact nearly went bust 6 years ago. Why should anyone love Metrofile?
No, it was an unloved share many years ago, and that's the point I'm trying to make. And nobody wanted to touch it, and people were selling it. In fact, I bought it at 13 cents a share, and now it's like nearly R3.60, and I've done very well out of it. Well, the point I'm trying to make is that now it's a share that's done very well, exceptionally well, performed over the last 6 years for me and for my family, and also for my clients. But more importantly is that what it is, it's essentially, you can look at it as a storage company, document storage company, but it rents out space where companies, where instead of storing the space in their offices, they store the space at Metrofile. Metrofile stacks it up 7 stories high in their warehouses, industrial warehouse space, and they rent it out at roughly anything from 500 Rand a square meter upwards. And that's very good if you compare it to a property company, or that's renting out office space. It's about 5 times office space rental per square meter, and if you look compared to industrial space, it's probably 10 times. And it's a very good earner and stable earnings growth, and a great dividend increase just recently, up 65%. And thanks to the management that turned it around.